there's shorter term policy and longer term policy implications. I think basically my thesis for a global bust is that we have leverage in the system so much higher than it's ever been before, and we're heading for a downturn. So, I think when I say leverage higher than ever before, we've got 320 trillion in global debt, right? Both private and public. We've got quadrillions in notional value of derivatives, which is leverage on the markets. So, even looking in comparison to 2008-9, we are so far beyond anything we've ever seen before. Leverage works well on the way up, right? It helps enhance returns. On the way down, it really exacerbates problems. So first and foremost, the reason for a bust is that leverage can turn a normal downturn into something far worse. We saw that in 2008-9 in spades. The leverage in our banking system was why we had a financial crisis like we've never had. This time, you've got leverage far beyond that. Our banks, particularly our large banks, are in better shape because of 2008-9, but European banks are in trouble. The Canadian banks didn't learn our lesson. They were in good shape back in 2008-9. Their system is very leveraged today. Australia's leveraged. China's got problems, obviously. Japan's very leveraged. So I think the problems could come, the catalyst could come from overseas, but it's going to be global. We'll be a part of it. And the other piece to this, if I put a formula together, it's leverage plus fragility caused by the pandemic. I think under the surface, we still have a lot of imbalances caused by what happened in the 2020 to 22 area. Yes, we've recovered statistically. Yes, lots of areas have done well, but lots of small businesses failed and lots of others are hanging on by a thread. It created, because of the response, the $5 trillion in QE and all the debt we put out to deal with the pandemic. It's caused a very fragile system. We've got I'm talking about the US, but it really is around the world. There's more fragility in the system going into what I think will be a recession this time around. And that just will exacerbate it'll be a global recession. I think the problems, the imbalances are around the world. We're not unique in that. And then thirdly, so I go leverage plus economic fragility from the, caused by the pandemic, plus what I think will be a very big policy error on the part of central banks. So the central banks in my opinion, don't really understand the underlying risks. They're not thinking they wouldn't be doing what they're doing now if they understood how fast this thing can go from looking fine to disaster. The leverage will take this thing down fast. We saw it in 2008. I remember in 2008, in early September of 2008, I remember I was one of the only voices out there saying, we're heading for a hard landing. And I got a lot of pushback because every economist out there was saying soft landing, no recession in sight. 3 weeks later, we had Lehman Brothers and a huge financial crisis. So that's how fast things can come, look okay, and then turn around and go south. And I think that's what we're going to see. Leverage will do that again.
When you say deflation, are you referring to deflation in asset prices or deflation in CPI, consumer prices?
Yeah, I think we'll actually see overall deflation. It won't last long. It's not a depression. It's not a long drawn out. But I think technically, even our price indexes will be in deflation. So it'll be asset prices for sure. I'm calling for an 80% bear market, or the potential of an 80% bear market from the top. But it's more than just asset prices. I think you'll see commodity prices fall through the floor. My oil target in the bust is $30. So that gives you some idea. I think we're going to see commodities get hit hard. Copper could go from, I have a copper target for pre-bust, meaning this year, of $6. And I had that when copper was 3.25, 6 months ago. I have a copper. I think copper could go to as low as $1 in the bust. So you're going to have some big moves in commodities. You're going to have other prices coming down across the board. So, but I think any deflation lasts not more than a year.
When you say that this is not going to be a depression, I wonder why you think that is. These problems that you've highlighted are long-term structural problems that if they do manifest in some sort of sharp economic downturn, it sounds to me like it might last a while, right? But it won't?
Good question. It won't for one reason, and that is the printing press. They will. We saw what they did in 2020, right? We saw what they did in 2008-9. And the period after that with QE 1, 2, and 3. What I think you're going to have when I say bust, I should define bust because people use terms without really understanding what they mean. I've started to talk about bust many years ago before it was being used. Global bust to me is something sort of like 2008-9, except it goes farther. In 2008-9, we were on the verge of a bust when GE was about to go under because the commercial paper market was frozen. If you remember that, in the fall of 2008, the commercial paper market froze up, and fortunately, the government responded very quickly, and that was right after Lehman, and responded with a lot of money, and so we avoided the bust. We avoided that stage that would take us over the cliff. We got very close, but we didn't get there. This time, I think we go over that cliff. And the reason is because of 2008-9 and because of 2020, our central bankers are all telling us they won't do that again, right? They're all saying, we don't want to go back there. We know it was a mistake. We're not going to print money like that again. That's nice to say, until you're staring it in the face and you've got banks across the globe dominoing across the globe in failure. They can't sit there and say, well, but we don't want to cause inflation, so we're not going to print money, or we don't want to prop this up. They will come in. And my estimate is that what it will take this time around, it took $5 trillion in 2020, or at least that's what they did. This time around, I think you'll see the Fed balance sheet expand by 20 trillion. So you'll go from 9 or 10 trillion to 30 trillion. And you'll see proportionally like amounts coming from every central bank.
That's going to spark massive inflation, would it not?
With a lag, because they're dealing with deflation and financial crisis, of major proportions. It will take a couple of years for that to manifest in terms of inflation starting to break out. You'll go from negative inflation in 2025, maybe into the first half of the following year. It'll be low single digits. By the end of 26 and into 27, inflation is going to move in high single digits toward double digit. By the end of the decade, I think we'll be looking at 25% inflation in this country. So yes, it's going to manifest in a huge commodity cycle, a huge inflation cycle. I'm calling for $500 oil by the end of the decade. Like I said, gold 20,000, copper will go through the roof. You're going to cause a real collision between this massive money and no infrastructure to deal with all the money chasing fewer goods.
By the way, this financial crisis that you're speaking of down the line, well, we're getting sort of a renewed fear of a financial crisis now in the U.S. with the Republic First Bank recently shut down by regulators. People are commenting that hundreds of small regional banks across the U.S. are feeling stressed. This came in from an article from CNBC. Christopher Wolf, managing director of Fitch Ratings, told CNBC that you could see some banks either fail or at least, dip below their minimum capital requirements. It seems to me like even the people at the top are believing that this is not the end of bank failures. Where do you stand on this?
Yeah, I agree with that. I think in the bust, which is mostly next year, like I said, it could start before the end of this year. Who knows? Because we will start with an economy in recession, right? It'll look like a recession and then morph into a bust as the financial system starts breaking. So I think we'll see recession before the end of this year. Whether the bust hits before the end of the year or not, we'll see. Yes, I think there's major bank failures going to happen. Like I said, in terms of the big banks, our big banks are in better capital shape than they've been. They were forced to get religion at the back in the 2008-9 GFC. However, there's so much counterparty risk out there. And if we see major banks failing around the globe, it's going to come back to us. So I can't say our big banks are immune. Certainly, our regional banks are very vulnerable. We saw that a year ago. And like you said, there's some signs. And that's why it's important to remember this stuff doesn't happen overnight. You don't go from everything healthy to everything breaking. There's things under the surface that are moving in that direction already. It just doesn't all happen in a time frame that everybody expects. So I think by the end of the year, I think some of those problems, we've got obviously commercial real estate problems in those regional banks. There's a lot of things under the surface, but that does not prevent a melt up before we get there.